go crude oil this morning. Okay. What we do when we first log in is we need to know the trend. Is the trend up, down, or are we going sideways and chop? Well, we are trending down. It's obvious this morning that our longer term moving average is pointed down. That's the first thing you want to look at. You can use J signal to do that. J signal on the long term Renko, my 5-sim Renko. You can have my 5-minute trend filter built in there if you want. As you can tell on crude, the same moving averages you can put on J signal, have it built in for you. You can see that we are in a downtrend. Look at that spread between the moving averages, angled down. So only shorts today on crude oil. So we know that. So that being said, since we know we're only doing shorts, how do we trade market profile? Well, if you look at the bottom left chart, we try to sell the first test of high value area, which is red, or we let low value area break the LVA and let it retest, which it did to give us a setup. And then we use a pull-in bar over here on the Renko bar to pull ourselves in. Okay, so that's a simple methodology that we do. If we're in a downtrend, sell the first test of high value area when you come within 2 ticks of it with a pull-in bar, or if it doesn't reach high value area, let it break LVA, because we don't counter trend trade this market profile over here on these black charts. We let it break, we let it retest, and then we use a pull-in bar technique. As you can tell, we broke through the 70 level. It retested. Look how it did on the over here on our pull-in. It broke. It retested for a number 3 trade off of volume profile. But look how it had ATR confluence. Now, how you use this upper left-hand chart, a lot of traders get confused. They're like, how do you use that chart? Right? I know how to use market profile. If you're in a downtrend, sell the first test of high value. If it doesn't reach high value, let it come down to low value. Don't buy low value because we don't counter trend trade. Let it break. Do an ABC short or a 1, 2, 3 pattern short against it, and you get short with a pull-in bar. The ATR chart is a really cool chart because what it does, it looks at the average true range of the market. And once it finds the average true range of the market, it posts these dots. The red dots are shallow retracement, average true range. The magenta dots on the outside are a full retracement, average true range. In the history of the market that I've seen, then also since 1985 with market profile, if you notice these dots, if you go back and look at every single day, every single week, month, you notice the market gets back into balance. Once it gets back into balance, it likes to recover, get back into balance, and it likes a continuation. So if you're in a downtrend, what happens is that these red dots show where the market gets back into balance for continuation, for a shallow retracement, meaning the market's really weak, if you get a setup right there, or if it gets to a full retracement to the outer dots, that's a full retracement, and that shows you a possible setup there also. So I use this 2-minute chart in the upper left-hand corner for the average true range of the market. It lets me know when it gets back into balance for a continuation of that trend. And if you notice right here, when we broke down through LVA on the bottom chart, we know if we break through LVA in a downtrend, we let it retest, we look for a pull-in bar. My market profile nailed it again this morning. It broke, it retested, we got a pull-in bar on the 3-sim Renko, right? You use the dojier spinning top after retest within 2, maximum 3 ticks. The body of the candle's got to close below it. It did right there. That's your exact bar entry to the exact bar with the exact 15 tick hard stop. You can use 13 if you want, like I do. All right? But look at the ATR confluence. It touched the shallow retracement on the first retracement to the LVA. This happens a lot. It happens a lot because the market, when it comes back into balance on this ATR, average true range, that typically is when you're going to have a market profile set up also. Another way to do it, if you get away from market profile, you can take the first retracement to the ATR if it's a first retracement. It's a really good way to do it also. All right, so that's how we use that upper left-hand chart. You see the white arrows I marked. Go to gold now, Gerald. If you look at gold, the same thing happened on gold here. Move over to gold if you can, Gerald, real quick, man. See if I can get Gerald move over gold. There we go. If you look, here's the ATR chart. Look how it got out of balance. It got down to about 82, came back to 84, got back into balance on my red dots, and sure enough, we get a pull-in bar. And right there's your ATR. There's a highest high spinning top. You put the line straight across. Once it closes, the body of the candle close below it. There's the body of the candle close. That's your exact bar entry. And now before unemployment claims, we got ourselves a trade on oil pre-market, right? Pre-news. Right, so that's how you do it. That's how we look to do it using market profile. That's how I use that average true range chart that's above market profile. I use it for Confluence. I don't use it for entries per se. You know, you can all by itself. I do like to use it for Confluence. You can do it if you're just breaking through market profile looking for the first ATR. And that's another clue right there, another tell. If you break through LVA like it did gold and you get an ATR and you get a pull-in bar, that's a tell that that is the inflection point for the reversal or for the continuation, sorry. So you can see it's pretty neat how this works. Now, if you look on market profile earlier, if you go back to crude, Gerald, if you go back to crude, we have a number one, number three setup. They actually number one earlier in the session caught the high. When you're in a downtrend, you want to sell this top here. You want to sell the high here. So actually 43.25 was the top earlier before this big move down to the downside 100 ticks ago. And my market profile called the high there also. That's called a number one trade. So number one trades are when you test HVA. So my market profile not only called the number one, but you're not going to buy the LVA down here. I know it caught the low at 4 a.m. this morning. You're not going to buy that. You're going to wait till it breaks and retest. See how it straddled it right there again? And then this morning it finally just broke it. So if I skinny that down, that's a number one trade here at the high on crude. Okay, that's a number one trade here on the high of crude. That's a number one because it tested HVA. All right, but notice how when it comes down to LVA, once you break LVA, get through it, then retest it, that's what I'm trying to get for the short on LVA. I'm not trying to buy low value area. That's for novice market profile traders. If I'm in a downtrend, I sell high value. I sell high value. I sell high value. I sell high value. I don't buy low value. I'm smarter than that. I'm more knowledgeable than that. I know over the past 30 years that if you try to buy low value in a downtrend of market profile, you're going to get killed on a consistent basis. I know to sell high value, but then I know if LVA eventually breaks and retest, I can sell that for number three. So there's a number one, there's a number three. There's only two setups in this trade room you need to know. Where's my number one? Where's my number three? My market profiles absolutely nailed it today. And I sent out some charts to you yesterday. Take a look at those. Market profile was just gorgeous. Read that in your emails. You have them in your emails right now. All you traders, read how to trade the best setups in market profile too. But that's how you do it. There's your number one. A number one is just a deep retracement to HVA in a downtrend. And number three is don't buy LVA in a downtrend. Let it break, let it retest, and try to get short. Okay? With J signal, let it break through LVA. Take the first retracement short with the J signal. All right? That's how we do it. Very simple.